Hi, and welcome to another session of our venture and capital interviews. Today, I've got probably one of the most known angels in Australia, Jordan Green, who, I suppose we've known each other for literally since since the time I started Wholesale Investor. So welcome to the session, Jordan.
Thank you very much, Steve.
So just to kick off, for those who don't know you, do you want to give a bit of a sort of background on your history and also on the Melbourne Angels as well?
Sure. Look, very briefly, originally I'm an electronics engineer. I did a whole lot of technical work and then started businesses. I had a software startup in Silicon Valley that I co-founded. And then when I came back to Australia at the end of the last century, I got involved in the venture capital community and co-founded and was a partner in one of the more successful venture capital funds here in Melbourne. And then started the organised angel community in Australia. And since then, I've built that community and connected it to the world. And a core part of that was, of course, starting Melbourne Angels, where I'm still the president.
I was going to say, now with the Melbourne Angels, how many members are part of the Angel Network now?
We've got about 85 members at the moment.
Fantastic. And the opportunities that you guys typically look for, what are they normally?
Well, most of the things that we invest in are pre-revenue. So we really are seed investors. That's not because we've got anything against revenue. We like revenue, but it's just the nature of where we're looking and the type of risk we're willing to take. We're usually investing to turn on revenue. Yes. So we're not looking for people who just have an idea and haven't found a way to get any further. They have to be people who've really demonstrated they've got what it takes to take their vision and build a business and be successful. Where as a group, we typically invest between $100,000 and $500,000 in a round. But it's not unusual for the companies in the portfolio that are succeeding that we continue to invest for 3, 4, 5 rounds of investment. So we can be the source of substantial capital, but not usually in one large lump. Equally, we're reticent to put too little capital into a business because undercapitalized is as good a way to fail as no money at all sort of thing. Otherwise, we don't have much in the way of a sectoral focus at the moment. The nature of the early stage market, particularly in a country like Australia, is one needs to be a little bit opportunistic and a little bit generalist. There are some things we're not likely to invest in, some where there are just inherent sort of ethical bias of the members. An example, we're very unlikely to invest in a betting business. We don't specifically say we won't. It's just I know that the members have never looked at those with favour. And that's got to do with the fact that being a member of an angel group and an angel investor, there's always an element of altruism. You want to be making the world a better place. So things that don't make you feel like you're going to be contributing to that outcome don't generally get a lot of support. On the other hand, the things that make you feel like that could be a great outcome, such as drug development, are often very hard to support because they're very capital intensive and very technical.
Technical, yeah.
So we have to find the middle ground. And since we live in Melbourne, and Melbourne is one of the top 4 medical research centres in the world, we have been developing a capability to invest in medical devices. And that gives us the opportunity to take something that on the one hand is really just a product that needs market validation. They call it clinical trials. And on the other hand, it's a health product that can do something to help people and makes everybody feel really good about themselves.
And why would an angel typically, I said participate in the Melbourne Angels? Is it because they sort of like this space, but they sort of don't really feel too confident going into opportunities themselves? So that's sort of what they're looking for, is that network of people with that sort of been there, done that experience?
Well, it's a combination of things. I think people join the angel group who like to work in teams. Yep. So people who prefer to work on their own don't generally join groups, or they join some of the networks out there that are really tailored directly to each member rather than to the group. So we run a group process. It's collaborative and collective. Melbourne Angels is a non-profit organisation. It's members who make the investments straight out of their own pockets. And if there's success in the investments, it's the members who reap the benefit. So I think that appeals to a lot of people, that this is not a business. We're not trying to make money out of our members or, for that matter, out of founders. What we're trying to do is encourage more investment. So people who want to work together, people who want to be able to learn. So we provide training, which is open to everybody, not just our members. They want to be able to access there are three main benefits of joining an angel group. One is you get access to a deeper pool of capital. So compared to doing it on your own, you can make a larger number of smaller investments, which gives you diversification of your portfolio. And that's the number one risk mitigation strategy of any portfolio. The second thing you get is access to the experience of all the other members. So left to our own devices, we would all quite naturally and quite appropriately only invest in things that we really know. That tends to narrow the field and concentrate your risk. And again, in a market like Australia with a relatively small market, that's an exacerbating aspect. But when you join the angel group, you get the access to the experience, the expertise, and the networks of all the other members. And that allows you to diversify your investment portfolio around scope. And that's the second primary risk mitigation strategy of any portfolio. Property, you do retail and commercial and industrial, right? That sort of thing. Both of those things, in theory, you could do yourself. Earn more money and learn more stuff, although neither of them is exactly easy. But the third thing that you get, I don't know any other way to get, and that is you get more time. This is a very time-consuming activity, and by having a lot of members all sharing the work in a volunteer way, then you get to borrow the time from the other members. And the last thing, of course, that underpins all of that is you get to have a bit of fun by doing it with like-minded people.
Now, I suppose it does become a bit of a sport, but the question I have, I imagine out of those sort of 80 plus members that everyone's got sort of different backgrounds and different sort of experience. Like what sort of backgrounds do you find are sort of sitting within the Melbourne Angels?
Well, at the moment, they're already quite diverse, and I will say we're working quite hard with our recruitment to increase the diversity of our membership. At the moment, we've got people who have been founders of conventional businesses and grown them and sold them over sometimes 20 or 30 years. Others who are still running their businesses as cash cows. We have people who have been, sort of tech startups. We have people who've never done a startup but have always been entrepreneurial. We have a member who was the first person to bring Oracle into Australia. So he was an American. He was sent out here to set up the business. It was a startup, right? He had to find an office. He had a chair. There are only two things he didn't have to do initially. He didn't have to worry about the money, and he didn't have to worry about the customers, at least initially. I mean, he still had to grow the business. We've had members who were the vice president of Microsoft in Australia. And his role was always to do everything new. Every time Microsoft brought some new initiative to Australia, he got given that and he ramped it up. So the core character of the members tends to be people who have an entrepreneurial flair in how they go about life. They want to see change. They want to champion change. They're not afraid of it, and they're willing to take the risk. So that perhaps gives you an idea.
I'd say I don't think I've met an angel that's not passionate. But the other thing I love about sort of angel groups, typically the members are actually passionate about the ecosystem. You guys are just as big believers in us as the way to make this ecosystem better is to continue to build it and to bring more people into it and to look to try and add value in as many ways as possible. So I was curious, like as a bit of a reference point, what are some examples sort of companies that have come through the Melbourne Angels that you've invested and sort of gone on to do sort of bigger and greater things?
Well, I think one of our favourite ones at the moment is a company called Rome to Rio. So Rome to Rio is a company born here in Melbourne by two guys who had a vision for servicing a global market niche, which is multimodal travel itinerary. In other words, the ability to say that you want to go from your front door to your friend's front door in a little village in the back of Spain, and in less than a second, you put those two addresses into the website, and it will tell you how to go door to door. So yes, it does flights like everybody else, but it does trains, trams, buses, ferries, car share, walking, taxis, right? It does all of that. And so they started that business here. We met them when they were barely starting, and we invested early. It's a company that has continued to grow, and late last year they were acquired by a German-based company. But this is the bit where I really like the Rome to Rio story. Number one, they never took any venture capital. Number two, they are a successful business based in Melbourne, dominating a global niche. And number three, when they're acquired to be who they are. That is, the company's brand is going to be maintained. The main office is going to be maintained here in Melbourne. They're going to continue to grow their business. that style of acquisition tells you the company has created real, sustainable, defensible value.
Yeah.
And that's what we're doing. And to me, I think if Australia can do that over and over and over again, sure, at some point we're going to sell those companies. Those are great export earnings, right? Those are all dollars coming into Australia. But if we keep those companies working here, then we keep the jobs, we keep the revenue, we keep the taxes, and we just keep making Australia a more pivotal part of the global ecosystem.
It's a really, obviously that's a fantastic story of a local company growing, making a difference globally. And then obviously I imagine typically they'll do it every other successful founder does, where they then go and reinvest back into the ecosystem as well with their gains. Now, curious, you mentioned about they didn't raise venture capital. What, did they just raise angel money, or were they also raising from sort of high net worths outside of the angels, or was it just through the angels they were raising?
They raised money essentially from three different groups of investors. And they only took, they took 2 rounds of investment quite early on. The angels were a big part of that. There was also what I would call actually an individual angel. So you could call him a high net worth.
Yeah.
And then there was one strategic investment, so an online travel agency, which itself was backed by some significant VCs, did make an early investment. The expectation was that they would sort of build from there. That never really happened for a whole lot of reasons that had nothing to do with Rome to Rio. And that's all they needed, because they focused on being sustainable and scalable, and they were very good at their business.
And as an investor looking to go into you mentioned that when the angels went in, it was very early. What was it about that business, that idea, those founders, that marketplace that sort of got you guys so early? Because it's sounds like at the seed stage, right? That's a hard space. So what was it about them that sort of had them standing out?
So it was one of the rare experiences we have where they came in and they made their pitch, and we had our Q&A, and then they left the room, and I asked the room, who's interested? And every single hand in the room went up. And of course, that wasn't all the members, because not everyone turns up to every meeting.
Yeah.
So we very quickly discovered we had a very strong interest. Why? First of all, the 2 founders demonstrably knew what they were doing, why they were doing it, and how to execute. Right? And they didn't have an ego about it. They knew they wanted to build a business based in Melbourne. They knew they wanted to make a global success story without leaving Melbourne. And they were attacking a niche that was both growing in terms of the market, but also the niche itself was relatively non-existent in the digital world. For some of us, one of the other appeals was it was a business that quite specifically was not US focused. So it addressed all the rest of the world where people travel by something other than cars and planes.
Yeah.
Right. And so that meant that they appealed all across Europe, all across most of Asia and most of Africa.
And their background before starting this business, had they been involved in that area previously? Like had they built and sold businesses beforehand, or was this their first sort of success story?
This was their first business. So they were both from Melbourne. They met when they were they met when they were both working for Microsoft in Seattle. And one of them was the lead developer on the Bing search team, and the other worked in another part of Microsoft. But they discovered they had a shared vision back then, or a shared awareness of the problem in the travel industry. And when they decided to give it a go, and they came back here. Now, so it wasn't surprising that somebody who had helped build one of the 2 main search engines on the planet decided to do a business based on search, and that it excelled at that. So that was also part of what was appealing, right? At the core of this business was search, but search done in a different way for a different purpose. And there's no question that they really knew what they were doing.
So when you're looking at an opportunity, now say, let's use them as an example. Rome to Rio comes to you, or any other company comes to you. What is the typical process that you will take them through? Like I believe there's an introductory screening process. So people typically send through their pitch deck.
So Rome to Rio is, again, let me just
Yeah.
sort of start a different place. Rome to Rio, again, is probably an ideal example in as much as I had met those guys first at an internal Microsoft pitch event where I was the only person who wasn't from Microsoft. And I met them probably 2 years before we invested.
Mm.
And then one of my other members had also met them in another way around the same time. So we had a relationship of quite some time, seeing these guys do what they do, figure out where they were going, how they were going to develop. So we developed a relationship, an awareness, a recognition. So by the time they came to present, they were already, in one sense, at least to myself and one or two others, a known factor. And that helps a lot, right? That helps a lot when they're not in the room and someone asks a question and I can say, well, I can tell you I've had something to do with these guys for, this much time. But still, and still today we look for those relationships, but there is a lot more activity. And so the way it works is no matter how we first make touch with a business, to try and coordinate all of our members around the opportunity, we have a process. And the process is that we want people to get into our online collaboration system, which they can do just by going to our website and submitting their information. At a bare minimum, we ask for a detailed business plan and detailed financial projections. Then we have a group of our members who volunteer for our screening team. One of them will be assigned to the company and will read that information in depth and then have an informed conversation with the founders about the opportunity. And in doing so, start to explore that relationship, start to explore attitudes, offer some of our sort of perspectives or requirements, and see whether or not it's an opportunity our members are likely to get interested in. Our goal, in one sense, is to give a quick no if we can.
Yeah.
So we don't want to send people away who we might be interested in, but we don't want to waste founders' time. So the way we focus our whole process is around thinking about the founder's time. Now, of course, that's our time, but the point is, if we focus on the founders, then everybody gets the best outcome.
What if it's a situation where it's a no for now, but you sort of like the concept, like the idea, and want it to progress? What's the typical approach?
Well, it depends why, but it's a good point, because a lot of the time we have the challenge that in Australia, as in many parts of the world, but in Australia in particularly, people just hear you say no, and that's all they remember.
Yes.
So time and again.
The reason I asked that, one of my good friends is a Singaporean VC, and he said his philosophy is he never says no to a company, right? And he'll provide reasons to why he may not be investing right now, but he'll provide guidelines for the future. And his thesis was that he's seen situations in the past where deals which he would have said no to have all of a sudden either pivoted or started hitting certain milestones which made the business appealing to him. And they knew that if they said no, that no gets remembered and they never get pitched again. Yes,
that's right. So the how you say sort of no, not right now for these reasons is always a challenge.
Yeah.
So the way we'd usually do it is try and identify something specific. So we had one company come to us, they presented to us, and they said, but in 3 days, I'm off to Singapore for a major trade show and I expect to sign 3 corporate accounts that I've been wooing for the last few months. And we said, great, well, we'll tell you what, why don't we just put this all on hold and wait until you come back? He said, well, if I come back with those 3 things signed, I want to increase my valuation. And we said, that's okay. Within reason, that would be allowable. That it would make sense. You've done something. He came back, he hadn't signed any of them. And so that changes the dynamic. But I think it's important to give people an understanding about why you're interested in them and what has to change. The best situations are when one of our members really likes a company and decides to keep giving them some guidance or counselling. That's the best way to stay in touch and the most likely to bear fruit. So a catch cry for us is that we want to try and deliver constructive value to the founders every time we speak to them, regardless of whether we think we're going to invest or not. So if we can always leave the conversation with them feeling like they got something out of it, then we've done our job.
And I'll add to that. I've obviously got, I've different angels sort of in my network that I've sort of got to know very well over the time. And I cannot say enough the difference that they have made in outlook, positioning, wording, small things. And they've given me advice at times when there was no need for them to give advice. We also do count an angel as a shareholder. And some of the advice I get from them around structuring and engaging shareholders has been incredibly valuable. And so what I think's really good about what angels do is it's because you believe in the ecosystem, it changes your approach. It's not just about yes or no. It's about how can you add value in some way, even if you are saying no, which is effectively what you just said. So, for me, if I was a founder, I would encourage them to engage, because even if it is a no, you absolutely walk away with some sort of value that you can use going into your next discussion.
Well, and in fact, it goes one step further. Core to our investment strategy is that we only invest our financial capital when we can invest our intellectual capital.
Yep.
We believe that it's that extra thing that makes the difference between the chance to succeed or not succeed. And that comes in many different forms. I mean, in Rome to Rio, the member who led the round, she went on to become a director of the company. And in fact, the acquirer, and she stayed a director of the company, so she was even chair for a period of time. And the acquirer of the company have asked her to stay on the advisory board for Rome to Rio. So the recognition of the contribution that the angels make is one of the big personal rewards we get. Also because directors have to act for the company, and we're very big on helping companies have proper governance. We also have a shareholder representative. That is somebody who is not on the board, but is an investor in the company, who can represent us as a communications point with the company. So, of course, in Rome to Rio, as in other companies, we had that role as well. And that person can actually counsel or advise the founders in a way that the director possibly can't, because there's a different dynamic going on.
And look, the other part to be blunt about in all journeys of companies, there's swings of ups and downs, and the advice or the input from both sides, whether it be at a board level, at a shareholder level, I think is quite valuable.
Yeah, absolutely. And frankly, it's also part of the reward that we get.
Yeah.
Right. It's the satisfaction of helping people is part of what you asked earlier. Part of what's the character of the people who join an angel group? It's people who want to work together and want to help other people. It's not just a financial play.
Yeah. Gotcha. Now, there's two questions I'd like to ask to finish. One is, if I was a founder coming to pitch to the Melbourne Angels, what advice would you give to me before going online and submitting some information about my company? What are some tips you could give sort of to better prepare for that?
Okay, so I think it's important that you start the process of raising your capital long before you desperately need it. It's hard for any investor to respond to, quick, give me money, I need it right now or I'm going to fail, because it takes time. And the easiest judgment to make is no. So if you want people to be able to say yes to your proposition, give yourself some time. And I know, Steve, you've been telling people this same story, but in Australia, I tell people they should expect it's going to take a minimum of 3 to 6 months and possibly as long as 12 months to raise capital. And that's not a bad thing. That's actually the same timeline is true in the United States if you're raising seed capital of this type. So people need to understand that we are not behind in any way at all. But that's about building those relationships, about giving yourself time. It's about getting that constructive feedback and having the opportunity to respond to it, to improve your proposition.
Yeah.
Some of the best investments come from the opportunity to build that relationship and people go, wow, this team really get what's going on. By the way, when we offer input, we're offering it. We're not about taking control. We're not about people doing what we say. What we want to see is really smart people whose minds are open to taking in all the input and then making better decisions. Not the decisions we say they should make, but the best decisions to succeed at what they're doing. And that's a really important thing to understand. This is not about ego, not our ego, not their ego. This is about finding a way, finding a path to the best possible success for the organization. So I would definitely encourage people to do that. I'd also encourage them to be as well prepared as they can be.
Yeah.
Have an actual business plan. A business model canvas is a great tool, but it's not a business plan. Now, I'm not talking about 150-page tome, 20, 30 pages.
We get sent those as well.
Yeah. But you have to be able to communicate your story to people to face and in words on a document. And that's because you have to be able to attract customers, recruit staff, win suppliers, get channel partners on board, and attract investors.
I think people forget that exactly what you just said is the reason why the pitch is so important is because every investor knows that founder needs to repeat that pitch every single day, day in, day out, because that forms a basis of there's a vision that sits behind that. And that's what the founder needs to engage, what you said, team members, suppliers, all the different stakeholders of the business, they engage them in that process.
And that pitch will be adapted. The core story will stay the same, but depending on what your audience is, you'll tell it a little bit differently.
Yeah.
So we don't penalize people for getting in front of us and being nervous, right? Most people get nervous for all sorts of things, and certainly when they're standing in front of a room of people, or these days in front of a camera, and trying to put their all out there. I would encourage people to get comfortable with taking that risk, because when you put yourself out there, when you're genuine and sincere and you share your vision and your passion, then you have a really great opportunity for people who are listening to you to engage and connect. And that's where success comes from.
Yep. Now, the final one is on the investor side, right? Because we obviously deal with sort of two sides. So an investor that's sort of watching this, obviously I'm assuming they could be either Melbourne based or in Australia, whatever. What would your advice to be about sort of if they're interested in what the Angels do and if they sort of want to go and find out? What's your sort of advice as a first steps?
Well, look, there are angel groups certainly in every capital city in Australia, and in fact, there's probably between 12 and 15 angel groups in regional Australia as well. So all up, we're probably getting close to 30 angel groups in Australia, and then there are a bunch of other people who provide angel networks, which is a different model. It's not this collective, collaborative, non-profit approach. It's more about a fee-for-service arrangement. So I think you need to talk to different people in those organisations, decide what's going to be right for you, and try it out. So in the case of Melbourne Angels, we have a fairly straightforward process of exploring membership. You contact us, we have a conversation to discuss what you should expect of the experience and of the group and what we would expect of you. And then we invite you to attend certainly one of our networking lunches, although they've been on hold during the lockdown, and our pitch meetings, which actually have increased since out the lockdown. So we invite guests to attend one or maybe two of those pitch meetings to really get a feel for how we do what we do, meet some of the other members and get comfortable, and also for us to get comfortable with them.
Yeah.
A lot of angel groups around the world say that membership is by invitation only, which sounds a little bit grandiose.
Good marketing pretext.
Right. But what it's really about is, this is like anything else, it's about finding a fit.
Yes.
So somebody who wants to join, and we do our best to allow it to be self-selection. We do our best to share who we are and how we do what we do and why we do what we do with people so that they can see if that's where they belong. I think in all the years I've been doing this, I think I've only actually said no to somebody who wanted to join the group once. And everybody else, a conversation has always allowed them to see, well, maybe this isn't for me. Maybe it's too risky. I had a guy who was a serious career executive in the oil and gas industry, and he felt he really understood risk, and he did in an oil and gas sense as the executive of a large global miner who was used to earning hundreds and hundreds of thousands of dollars a year in base salary and bonuses, and he had the money. He had what he thought was a risk appetite, and he spent a year in Melbourne Angels, and every time it came down to investing, he just couldn't quite let go of the money, right? And he came to me and he said, Jordan, I just don't feel this is for me. And I said, well, that's okay.
Yeah.
It's not for everybody. We're happy to let people who think it's for them and who seem to be a good fit to give it a go. Most people find there is a way for them to be involved. And we've been here for over 13 years. We're going to be here for a long time. If I've got lots of people who've come and gone and come back again. We have one of the characteristics of a lot of the people who join an angel group is they get caught up in either one of the businesses we invest in and decide to become an executive, which is not the norm, but it's certainly possible because of the nature of the people. Or perhaps they already a founder themselves and they get their next idea and they want to go away and do it. So we just go, great, do that. And then when you've finished that, you'll have hopefully more money, more experience, more knowledge, come back and make our decision-making process richer and better with everything that you can bring.
Brilliant. Well, Jordan, thank you very much for your time. I always enjoy chatting with you, whether it be personally or in sort of sessions like this. For those that are interested, do reach out. If you are Melbourne-based, do reach out to the Melbourne Angels. I know I've got good relationships with at least sort of 4 of your sort of angel members. And we've got some great relationships in the Sydney as well. But we've spent more time with the Melbourne Angels than what we have with others. So thank you again for your time, and look forward to seeing you hopefully at a live event sometime soon.
Thank you, Steve. Look, I do want to say I've enjoyed knowing you since you started Wholesale Investor. It's been a very interesting journey. When you first started, it seemed a bit odd. You were starting a colour magazine at a time when everybody else said print was dead.
Yeah.
And now today you're building out Crisp, which I think is a wonderful evolution of the mission that you've set for yourself. So I commend it to everybody. I think it's going to be an excellent addition. And with the international connections that you've built, again, as you know, I believe Australia is served best by recognising that we are intimately and well connected to the rest of the world. So I think that's great, and I wish you all the best on the journey.
Thank you very much, Jordan. And to add to that international flavour, we're actually going to be launching a virtual Emergence Canada very soon.
Hey?
It's true. Emergence Canada is going down on 3 a.m. Saturday morning.
Very good. That was a little Canadian joke. They always go, hey?
Got you. Thanks so much, Jordan. Much appreciated.
Okay. Thanks, Steve.